It is time to review Ethereum again. Now, this is not just about Ethereum. Ethereum has a lot of correlation with the altcoin market. So whatever going to happen with the Ethereum price will spill over to many altcoins as well. The last video on Ethereum published on this channel was rather critical, and the reaction to that video is interesting because it seems like the market as a whole tends to still be very bullish. But I tend to disagree. Have a look at this chart here. This is Ethereum relative to Bitcoin, and what we see here highlighted with this blue arrow, that's the move from proof of work to proof of stake. That was the merge. So this is when all the miners had to shut down their mining equipment, and when then just holding Ethereum created more return for the holder base. Now we saw a turnaround in the middle of April of this year. That was fueled by the Ethereum treasury company story. So now listed companies buying up more and more Ethereum, a trend that started with Bitcoin, but the rally has taken a breather. And interestingly enough, that turnaround happened exactly at the resistance one might expect. Now what's interesting is that the Ethereum to Bitcoin valuation chart looks extremely similar to the Ethereum dominance chart. So really, the relationship of Ethereum to Bitcoin is what determines Ethereum's relevance within the market. Now, why is this rally suddenly coming to a halt? Because it looks like the Ethereum treasury companies are still buying. But the purchases don't look that healthy structurally anymore. Because have a look at who's actually buying. It's Bitmine. It's the leader that continues to accumulate. When we take away Bitmine from this chart, then we've got this accumulation graph. It slowed down massively at the end of August, and there was zero increase since the beginning of September. It's only one entity that continues buying. And so really, this is not an Ethereum treasury company story anymore. This is just a story about Bitmine. And since the Ethereum dominance is so much correlated with the Ethereum to Bitcoin chart, let's have a look at the same effects for Bitcoin. So this is the purchases across all treasury companies. And of course, there's also a leader, which is Michael Saylor's strategy, formerly known as MicroStrategy. When we take away that entity, we still see continued buying. So really, the purchases of Bitcoin are more robust compared to the purchases of Ethereum. Now, why is the Ethereum dominance, so the importance of Ethereum within crypto, that much in line with the Ethereum to Bitcoin price? I believe that's because the altcoin market has a high correlation to Ethereum as well, because of a direct coupling. Have a look at this chart. In green, we see the Ethereum price. In blue, we see the total 3 ES chart. Now, total 3 ES is all the altcoins except Bitcoin and Ethereum and except the stable coins. So it's all the volatile altcoins. And again, have a look at how tightly this is correlated. When Ethereum is going down, then the altcoins come down with it. When Ethereum is going up, the altcoins come up with it. If we don't like the development for Ethereum relative to Bitcoin, then as per extension, we should also not be a fan of owning a diversified altcoin portfolio. Now, why do we see this strong connection? It's because mechanistically, many altcoins are traded directly versus Ethereum. So whenever Ethereum goes down by 10%, maybe because long-term Ethereum holders are selling, then automatically those altcoins that are tied in liquidity pools versus wrapped Ethereum also go down by 10%. So not a single trade has to happen on-chain for the altcoins to lose 10% in US dollars if wrapped Ethereum also loses 10% in US dollars. Because of this tight coupling, we see this high correlation. Now, this is a comparison of market caps. It's not a comparison of prices. And there is a significant difference for many altcoins. Because have a look at the smaller altcoins in the last year. Most of them lost money. There's a lot of red, while the Ethereum price went up by 85%. How is that possible when the coupling of the market caps is so strong? The answer to the puzzle why all of this is red is token dilution. It's more and more tokens hitting the market over time. So the early investors of various altcoins and the insiders, they get vesting unlocks. They get new tokens minted out of thin air that they can sell over time. And that puts pressure on altcoin prices. Most weeks we've got more than $1 billion worth of unlocks in the altcoin market, and that's only for the altcoins that are directly tracked on Tokenomics.ai. Some weeks the unlocks are even larger than that. The unlocks do not impact the market cap. The market cap is unchanged, but it does impact prices. For example, have a look at WorldCoin. WorldCoin's market cap is very close to the all-time high. But buying into WorldCoin would have been a mistake. The price is very far away from the all-time high. We used to be at $10, now we are at $1.18. The price chart and the market cap chart don't necessarily have to look the same. And again, the reason for that discrepancy is simply new tokens hitting the market. So it's the investors that get unlocks, it's the development team that gets unlocks, and there's also a little bit of reserve over here. But really, it's the early insiders that dump, which then in turn even paints a worse picture for the altcoins. Because again, the market caps trail very nicely, but the prices underperform. So if we think that Ethereum will underperform Bitcoin because people are taking profit and because the treasury purchases aren't that safe anymore, then we should also expect the others' dominance to go down. So the importance of all of the altcoins relative to the rest of the market should come down. It's already declining for almost 3 years by 60%. Now it's important to understand those concepts of relative valuation, of market caps relative to prices, etc. Because I'm just talking about opportunity costs. I'm not talking about the US dollar price. When suddenly Bitcoin goes up by 50%, then of course Ethereum can still go up by 20 or 30%. So the US dollar price can go up, but still Ethereum would have been the worst bet compared to the rest. I actually do expect that that's the most likely scenario, that all crypto prices will go up, but that simply Ethereum and most altcoins will do worse compared to Bitcoin. Why do I say that most crypto prices are likely going to increase? It's because of the stablecoin market cap. So the stablecoin market cap is increasing since the beginning of October of 2023. So this is money coming from the fiat ecosystem into the crypto space. And when money is flowing in, when the stablecoin market cap is increasing, then of course valuations of cryptocurrencies in general should go up as well. Outside of this temporary rally driven by the Ethereum treasury company story, we have only seen Ethereum underperform Bitcoin since the merge. Really, I do believe that the merge was a mistake because mining Ethereum onboarded new users that never had anything to do with crypto, that simply just wanted to use their electric power, that just wanted to use their computer to get into crypto, to get some exposure. They then played around with Ethereum ecosystem and potentially even bought more. This influx of new investors through mining at home has completely stopped since the merge. And that's probably one of the reasons why Ethereum is doing so much worse compared to Bitcoin now. I think it's very likely that Ethereum will struggle from here. And I'm not always an Ethereum bear. Have a look at the videos published in August and May of this year in this channel. I was quite long Ethereum. I had a lot of exposure to Ethereum. I took advantage of the rally, but now I've sold the vast majority of my ETH. I'm currently betting on Bitcoin doing better than Ethereum. Ethereum underperformed Bitcoin since then by 60%. It also did slightly worse compared to the monetary base. So this is now the Ethereum market cap divided by USM2, how many dollars are currently floating around. And since the merge, Ethereum did not perform better than the US dollar expansion. It also did not do better compared to gold. So really, I disagree with the idea that Ethereum becomes a new form of money, that it becomes ultra-sound money, that it becomes a new safe into crypto. Ethereum is too centralized, it changes its technology too often. And even though gold has a way larger market cap than Ethereum, it outperformed ETH since the merge. Here was the branding at the time post-merge. Ethereum being the ultrasound money. So the money that's not just sound, that's not just stable in supply, but that's ultrasound, that's shrinking in supply. And initially we did see the Ethereum supply going down because of the usage of the chain, because a lot of ETH was burnt with every transaction. But that's not the case anymore. More activity has moved to the layer 2s, and so now the inflation of Ethereum is very similar to Bitcoin's. And so thus I do believe that very long term Bitcoin is the better store of value. It's more decentralized, and yes, it does have less features, it doesn't have any smart contract functionality, but that's not what Bitcoin is about, right? Bitcoin is just about storing value. And Ethereum is in this tough mid spot. It's not a super effective smart contract platform. There's the layer 2s and there's also alternatives to Ethereum, and it's not a great store of value as well. So it's neither fish nor meat. It's somewhere in the middle, and nobody wants that. I'm betting my money on this chart. I'm betting on Ethereum underperforming Bitcoin, and as an extension, also many altcoins underperforming Bitcoin. Now, here is one of my favorite websites. Most people don't know about it, most people don't discuss it, but I think it's extremely valuable. It's Tokenomics.ai. So here's the name, Tokenomics, it's .ai, and it shows how much token inflation various altcoins has. How much supply is already circulating versus is going to circulate. This is extremely important information because price is the result of supply versus demand. Let's have a look here at Optimism and Aether and Starknet, Arbitrum and ZK Zinc, because they tend to still have a lot of token inflation ahead of them. This is how the supply looks like for Optimism. This is how supply looks like for Aether. Here is Starknet, here is Arbitrum, here is ZK Zinc. So really the problem with those altcoins is that the supply goes up so fast that it needs a lot of demand growth as well just to keep the price flat. And usually the demand doesn't grow as quickly. Here is Optimism relative to the rest of the altcoins. So Optimism divided by others. Initially there was a bit of a run up, but then the tokenomics took over. And so Optimism underperformed by 91% within 2.5 years. Here is Aether relative to the others market cap. We didn't have yet that much time to underperform, still 33% so far in the span of a bit over 1 year. Here is Starknet, 1.5 years and 94% underperformance. Here we've got Arbitrum. Again, those are all relative valuation charts. This is how is the altcoin doing relative to the rest of the altcoin market, relative to the others market cap. This here for Arbitrum is an underperformance of 88% in the span of less than 3 years. Then here ZK Zinc, again down 80% over 1.5 years. And this situation, it's very typical for altcoins with high inflation. And so it's important to look at these kind of numbers. Tokenomics.ai has all of that data. So we can simply just stay away from those altcoins. That's one option. Or we can actually try to make money from this. And that's what I personally do. So I'm just flipping this chart around. Instead of seeing the underperformance, I see outperformance. This is now others relative to ZK Zinc. I go long the solid assets, so Bitcoin, Ethereum and Solana, and I go short things like ZK Zinc, the highly inflating altcoins. For example, this position here, since the beginning of the year, made 214%. Now tell me an altcoin that did this performance since beginning of the year that was not just cherry-picked among many different options. The great thing with this strategy is that there are many altcoins that have a highly inflationary supply. And again, a lot of those tokens don't do that well. Here, for example, Trump. Trump so far has 35% unlocked supply. But there are still many more unlocks coming. And so imagine you buy Bitcoin and at the same time you short the Trump token. Then you're getting this return here. Yes, there is a bit of volatility along the way. This, by the way, was the announcement of the Trump dinner for Trump token holders. But the long-term trend cannot be disputed. I am making money with that strategy of betting on rising prices of Bitcoin, Ethereum and Solana and shorting the bad altcoins for already more than 4 years. Had I just dollar cost averaged into Bitcoin, I would have gotten the return here in gray. But because I also did those relative valuation bets, I got the return in black. This is monthly data. Most altcoins underperform Bitcoin, Ethereum and Solana most of the time because of all of the new tokens that hit the market, because the insiders and the early investors, they get vesting unlocks, they offload and they dump on retail. And so I understand that this strategy isn't as straightforward as just buying an altcoin, but really we want to get the odds in our favor. And I tried to make this as simple as possible. There are 2 videos that you have to watch: how to use perpetual futures to bet on relative valuations and how to manage the risk with relative valuation bets. It's this video over here, that's 34 minutes. It's this video over here, it's 28 minutes. So it's 1 hour of content in total. And once you have watched that content and you've joined the community, the premium community, I will share my favorite trade with you. It looks very similar to the trades that we looked at here in this video. If you do not make money with that trade after holding it for 1 month, then I will refund you the premium membership fee. So really, you have no risk at all joining and trying it out. It's currently $125 per month. You just open the relative valuation trade after you've learned all of the concepts. If you make money with the trade, then you can simply continue copy trading me. If you don't make money, then I'll refund you the fee, no questions asked. I will of course continue sharing my trades. That's in real time. So for example here where I shorted the Move token, Move was very highly inflationary as well. Over 3 weeks we made 8.5%. Again, if you add some leverage to this, this can mean very nice long-term compounded growth. Here, just have a look at this chat by the premium members. Once you know how to manage your risk, you can make a lot of money with those relative valuation bets. So I believe that's the real way to make alpha, to make outperformance in this market. It's not about finding the 1 or 2 winners, the needle in the haystack when everything else is going down. It's rather betting on the market structure. That's against most people, but most people simply don't follow relative valuation bets. And that's why we can make money with this, right? It's only the minority of people that make money in a market. And I believe betting on falling prices while hedging our macro risk, right? We go long one thing, we go short the other thing, and holding those positions long term. That's where we get similar payouts to the insiders and to the teams, etc. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.